please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Focus to earnings then. Auto major Eicher Motors will be reporting its second quarter numbers today. Naveen's back with us. He's going to tell us what is the street expecting from the Royal Enfield. Naveen.
Thumping, Nigel, that is what the numbers have been generally for the last 2 to 3 quarters. But this quarter also we are expecting steady set of numbers. So if you see, I'll begin with the top line. See, the street is expecting a growth of close to 25%. Remember one thing, the volume jump that Royal Enfield specifically has done is already 21.5%. On the other hand, if you see their commercial vehicle business, that has grown by 12.5%. So the major jump that we'll be seeing is purely on the basis of the increase in the prices that the company has taken. Remember, one key pain point for the company has been the product mix. The company hasn't been able to sell products above their 350cc, so that is one pain point. On the other hand, if you see the margins, only company, if I see in the auto pack, which is expecting, where the street is expecting an expansion in margins. So here we are expecting an expansion of close to 50 basis points. Small, but nevertheless significant looking at the overall scenario. So 31 plus is a very important point for Eicher, and that is what the street is expecting in terms of the margins. PAT growth, clear 33%, not much to think about. It's a simple company, no debt, nothing. So PAT growth is 33%. Apart from the numbers, 2-3 key points to watch out will be their announcement on the Chennai plan. Recently, the Siddharth Lal, the chairman, had an analyst meet wherein he said that they will be ramping up the Chennai facility. So any more dope on that, any more information on that will be the key point. Also the waiting period. Remember, for Eicher, the biggest problem is not the demand, the biggest problem is the supply from their side. So the reduction in waiting period, any announcement of that will also be key going ahead. Back to you.
Okay, Naveen, thank you for that. So, strong quarter again is what is expected from Eicher Motors. But all eyes will also be on Bank of Baroda today as it reports the second quarter earnings today. Asset quality will be keenly watched out for this quarter. Abhishek, what are the key things that you are expecting from Bank of Baroda today?
Well, Anisha, the key important number will be the slippages. You know, slippages in the last quarter was at 5,200 crores. So anything below 3,500 crore will be very positive. Now, the gross NPA spiked to 11.4% versus 10.5% in the previous quarter. So improvement in gross NPA will be very positive. Domestic loan growth was at 8.7%, and the stickiness of low-cost deposit had aided, you know, the net interest margin movement last quarter. So continuation of that on the domestic NIM above 2.5% will be very positive. I'll be watching out for provisions because many of the PSU banks have reported an increase in provision owing to IND AS in terms of accounting, and also key accounts like Reliance Communications, JSPL, for where in the standard provisions have been increased. The exposure to the next 30-40 NCLT cases will be also washed out. Remember that for the last top 12 accounts, they had an exposure to 10 accounts worth 7,200 crore, but had a provision coverage of above 50%. Our polls suggest an NII growth of 2.7%, while net profit to be down 16.8%. Back to you.
Okay, Abhishek, thanks so much for that.
Let's shift focus to the world of commodity now, and Manisha Gupta is standing by to give us a roundup of what's happening in the world of commodity. Good morning, Manisha. What's the news in the world of crude and metals today?
Thank you so much for that. Let's start with metals because we have seen a strong rebound in the markets yesterday, and it seems to be taking some support right now as well. While, of course, we have been counting many fundamentals on how the global GDP has been growing, the dollar has been on the weaker side, the demand is strong and the supply is not able to catch up. And the whole point about China cracking down on pollution and cutting supplies, and the market's estimating its stronger demand going forward as well.
System. So to me, now if we hadn't had the announcement on the bank recap, I think the Indian market would be very vulnerable. And what's really interesting about the mutual fund inflows is they really started when Mr. Modi was elected. There wasn't any flows before that, and it's been going on ever since. But I also have to think we should also acknowledge the fact that we've had, in recent years in India, we've had positive real interest rates, because the central bank's been running a tighter policy. So I think there's just the fact that real interest rates above inflation has further encouraged inflows into bond funds as well as equity mutual funds. So I just think this is a long-term positive trend. I also think there's a generational aspect. In terms of the younger generation, Indians, I think, are more willing to invest in financial assets and less culturally inclined to buy jewelry and gold.